guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those were all of the headlines that we're tracking as we get into a brand new week. It is a truncated week, but we have lots to get to today, so we're going to talk about that. And first off, let's start with the Asian markets. So we are seeing most of them in the green right now, and gains are led by the Hong Kong markets, which are up 350 points right now. So over a 2% gain on the Hang Seng that you have on your screen. The Taiwan index is also up, and that one is also faring extremely well, over a percent higher as we speak. Nikkei is the other one that is faring well. It's seeing gains of 1.4%, and across the board, most Asian markets are holding up quite well. So Kospi is up 0.7%. You have the Straits Times, which is seeing just some minor gains right now, but all in all, this is a very good start for the Asian markets. The SGX Nifty, by the way, will also come up, and that is indicating a good gap up start for our own markets. Nearly a 90-point higher start is what the SGX is indicating. So that's what's happening in Asia. But let's talk about the U.S. markets now. Wall Street ended Friday's trading session sharply higher. So the Dow Jones surged 400 points. The S&P 500 saw a gain of 1.5%, and the Nasdaq Composite also closed over 130 points higher. This was after the jobs report. CNBC's Kate Rooney is standing by to get us a wrap of what was an extremely exciting session on Wall Street.
Investors split today on how to interpret this morning's employment report. The jobless rate increased to 3.7%, leading some to think weakness in the labor market could allow the Federal Reserve to cut back on its anti-inflationary interest rate hikes. But 261,000 jobs were created. That was more than expected, and that strength could prompt the Fed to keep raising rates aggressively, even if it puts the U.S. into a recession. The Dow started sharply higher on the weak jobs market interpretation, but then pulled back on the strong jobs market point of view. It ended Friday up about 1.33%, though it was down the same amount for the week. The S&P gaining 1.3% on today's session, down more than 3% on the week, and the Nasdaq tacking on 1.25% today, although it fell nearly 6% for the week. As Twitter started telling half its workers they're losing their jobs, new owner Elon Musk accused activist groups of pressuring advertisers to pause their spending on the platform because, quote, they're trying to destroy free speech in America. Musk says that as a result, his company has suffered what he calls a massive drop in revenue. That's the action from the U.S. market. Back to you in Mumbai.
Kate, thanks a lot for getting us all of that action from the U.S. markets. But staying with Wall Street, and the key cue that Kate mentioned as well was that the U.S. non-farm payrolls surged by over 260,000. This is for the month of October, and this is significantly higher than the estimates that we had. The unemployment rate also ticked up to 3.7%. This is from the 3.5% that we had in September. So CNBC's Rick Santelli is here, and he filed this report earlier.
October jobs report to show us roughly 200,000. It's a beat. 233,000 non-farm payrolls. But there's a bit of a fly in the ointment here. 233,000 is private payrolls. Non-farm payrolls is 261,000. And the fly in the ointment is that 263,000 in the rearview mirror and 263,000 back in April of 2021. Those were the low water marks, meaning that we've now made the lowest level of month-over-month non-farm jobless expansion since December of 2020, when it was actually minus 115,000. So 261,000. If we look at manufacturing payroll, 32,000. The unemployment rate moved up to 3.7%. It was at 3.5%, which is the best it's been. So up to 3.7, that would mean the highest level since February of this year, when it was at 3.8. And if we look at the average hourly earnings, maybe some of the most important data today, it's up 0.4, a bit better than expected. We had up 0.3 for the last 2 months. Prior to that, in July, it was up 0.5. So this is the best since July.
All right, that is the complete roundup on what came through on the jobs report. But on that note now, let's also bring you some important opinion on the jobs report, as well as what the Fed could do from here on.
It's pretty consistent with what I hear from contacts, which is that demand remains solid. The labor market remains tight. And, you can point to the unemployment rate. You can point to wages. We're not getting much help on the supply side. Participation ticked down. And I just think firms are still holding on to workers. Firms have gotten a taste of increasing prices. They've started to increase prices. They still have, in many cases, cost pressures, margin pressures. And as you can see in some of the more recent announcements, there's still a sense that prices still have a room to go. And I think it's going to be hard for people who have fought hard to increase prices to back off.
From time to time, between the two surveys, the establishment survey and the household survey, the establishment survey definitely very solid, somewhat stronger than expected, whereas the household survey was much weaker. But generally, I think you should put more weight on the establishment survey. So overall, I would say this was pretty solid. There has been a deceleration in employment growth as we've gone through the year, from extremely strong rates of job growth to merely strong rates of job growth. The other thing to focus on, I think, is the wage numbers. While today's number was a touch stronger than consensus expectations, if you look at different indicators of wages more broadly over the last several months, there's been a deceleration in wage growth.
Doesn't seem like things will get much easier there in the coming period. On a slightly more positive note, I do think China reopening is definitely getting a bit of a buzz and maybe helping a bit global risk sentiment. So I do think that's playing a role. Positioning still, for the most part, remains pretty low, and you could see a bit of pickup in buybacks. We're coming out of the buyback blackout period. Consensus in the meantime, I want to say last few weeks has come from about 240 to now low 230s. So yeah, 225 is calling for basically flat growth. We still see top line expanding next year. We see some margin, compression, but not significant. So again, I think it depends on how central bank policy continues to evolve, the dollar effect, how that evolves. Labor market, I think, is extremely important because that continues to drive pricing power.
All right, that is some important opinion that we are tracking today. But with that, let's bring you the final update on our global market wrap this morning. The European markets ended Friday's trading session sharply higher. So the French CAC index as well as the German DAX, both of them closed with gains of over 2.5%. And the British FTSE index saw a gain of around 2% at the close. Now, the European Central Bank is prepared to tighten monetary policy more aggressively if the current rate of inflation persists. So this is something that we have been telling you. The ECB President Christine Lagarde said in a speech on Friday, note that the final S&P Global PMI, or Purchasing Managers Index, for October dropped to a 23-month low of 47.3% in October. This is from 48.1 that we saw in September. Note that the PMI reading is quite a reliable gauge of economic health, and anything below 50 indicates a contraction. So those are some important comments that came through from the ECB president on Friday as well. That's what we're tracking globally, but let's now talk about everything that you should be looking at as we get into a fresh trading session. We have our research team joining us with the trade setup this morning. So guys, a very good morning to all of you. We have Rima, Vahishta, as well as Nigel joining us. Rima, let me come across to you first. It was yet another positive week for our own markets, the third straight weekly gain that we saw. But take us through everything we should track today.
Well, it looks like we're going to start this truncated week with strength. The Sensex Nifty is suggesting a gap up opening of close to about 100 odd points. To run you through the cues, global markets are upbeat, as you pointed out. U.S. markets ending with gains of about 1.3% on Friday. The key to track will be the U.S. midterm elections on Tuesday and the CPI print out of United States on Thursday. These will be the two big global focal points. The Indian markets have been consolidating. They've been adding on bit by bit over the last couple of trading sessions, despite weakness in the global markets. The key support level will be Thursday's low point of 17,959. So that 17,950 to 18,000 will be seen as a support level, and markets will be eyeing their all-time high levels. Strong earnings will also probably support the markets today. So from State Bank of India, Bank of Baroda, numbers were a beat. Titan numbers were strong. You have a sneak peek in terms of, the numbers that they disclose in terms of business updates, but Titan numbers were also fairly strong. The FIs continue to buy in the cash market. On Friday, they bought for the 7th consecutive day in the cash market, buying close to 1,436 crore. The DII sold 548 crores. So net institutional was a buy of nearly 1,000 crores. So that's a positive. So far, the earnings season has been pretty healthy, and now we enter the last leg of the earnings season. So we're still awaiting numbers from Tata Motors, M&M, Coal India, LIC, a couple of the other important ones like Zomato, not in the Nifty, but huge interest over there. It's going to be a busy week for primary markets as well, as 4 IPOs will be opening this week. Back to you.
All right, Rima, thanks a lot for taking us through all of those cues that we should watch. But let's now talk about all of the individual stocks that you should keep on your radar as well. This weekend was all about earnings, and some big earnings at that. So Vahishta is here to compress all of those and bring us the highlights. Vahishta.
Hi, Pavitra. Good morning. Let me start off with the big one in the pack. That's SBI. Stellar performance this quarter. ROI crosses 1% for the first time in the history of the bank. The bank reports the highest ever quarterly profits, which is led by 19 quarters high loan growth. Also, the bank gains market share on a year-on-year as well as a quarter-quarter basis. Moving on to TVS Motors, again, strong earnings. Revenues were higher than estimates. Q2 strong volume growth of 12.1% year-on-year, coming to 10.27 lakh units. And this is the fourth consecutive quarter of 10% plus margins. Moving on to some of the FMCG players, Britannia, inline volumes, there's been a beat across all parameters and reports the highest ever quarterly revenue. Cummins India, all-round beat versus the CNBC-TV18 poll. Domestic sales have improved 11%. Exports were better off 21% in this quarter and contributed 500 approx crores. But the management stays cautiously optimistic on the short to medium term demand outlook. Well, for Marico, domestic volume growth at 3% versus the poll of 1 to 2%. Gross margins, though, have dipped but improved on a year-on-year basis. The last one is Titan. For Q2 of FY23, the revenue beat was led by sale of gold ingots, which was worth 482 crores versus 192 crores on a year-on-year basis. The EBITDA beat was led by jewelry business, one-off gains of 2%.
All right, Varishta, thanks a lot for getting us that entire list of stocks. We're going to keep all of these on our radar. Finally, let's hand it over to Nigel, who's looking at all of the cues from the futures and options space. Hi, Nigel.
Well, morning. Coming out of a weekend, I'm just thinking that the FIs at one point of time, their status update was complicated. Now, in fact, it appears they're in love with the Indian markets. Last 7 sessions, they've been buying non-stop on a day-to-day basis. Well, it's, they're pumping close on 2,100 crores odd. So the FI money, well, that's back and that's pretty good news. Now, in the F&O market, the live indicator that you have is the premium on the Nifty futures, and that expanded to around 77 points. So that indicated that there was some long addition, but not from the FIs, because the FIs, they added some mild shots, close on 4,000 contracts out there, little more than what they added on the long side, but they continue to remain net long, because 58% of their position is on the long side, 42% is on the short side. On the option side, well, they're doing both of it. They bought more calls than puts, so you'll say, well, that's a bit of a bullish sentiment. The problem is they continue to write calls quite aggressively as well. So, both those two data points, they nullify each other. But I was looking at the most active strikes. The 18,200 call, the 18,300 call, well, between them, they added close to around 35 lakh shares. There were signs of writing at both these two strikes. Now, on the downside, the 18,000 put, well, that added close to around 40 lakh shares. So that's giving the bulls hope that around that 17,900 odd should hold out in the near term. And the PCR, which was going to around 1.3 odd, that's cooled off to around 1.1 odd, which is fairly good. Now, what are the levels you're looking at? Well, we're going to be starting off well in the green. But breaking out of that 18,300, well, that'll be very, very interesting. There could be some resistance at that level, so we're likely to start out there. But till that 17,900 odd mark, you'll say, well, you're pretty much in bull grip. And the 50 DMA at around that 17,550 odd, that's the next support zone. So let's hope we have a good Monday. Back to you.
All right, let's hope we have a good Monday. For now, looks like the start will definitely be quite positive, like Nigel was just mentioning as well, around 87 points higher on the SGX Nifty. Nigel, Rima, Vahishta, thanks a lot for joining us and prepping us up for this trading session. With that, it's time for our first short break in the show. But when we return, like we told you, State Bank of India and Titan are in focus on the back of their second quarter earnings. So we'll bring you up to speed with all of the details when you come back. Welcome back. You're still tuned into Power Breakfast. And like we were saying, it was all about earnings this weekend. So let's talk about a few of the big ones. Titan posted a good set of second quarter numbers. So Mangalam is here to bring us the fine print. Mangalam, how's it looking?
Well, the Titan numbers were solid gold, but some of the shine perhaps may not sustain going forward as well. But that's not taking away from the fact that the results were extremely good. If you just take a look at all the parameters, the company beat street estimates and its own guidance as well from the second quarter update. Revenues of 8,700 crores plus versus street expectations of just about 8,500 crores. The EBITDA a good 100 crores higher than expectations, and net profit coming in much higher than expectations as a result of that. However, the revenue beat was led by sale of gold ingots worth nearly 500 crores, and this compares with around 200 crores year on year. So that's what the revenue beat was accounted for and the EBITDA beat actually had about 2% in terms of one-time benefits coming in on inventory gains in diamond as well as custom duty benefits. So to that extent, the management believes that the margins in jewelry and watches could be anywhere between 13 to 14%, as against the numbers which are seen closer to 15% in the second quarter. However, the festive season like-to-like growth has been around 18 to 19%, even though the management has refrained from giving a guidance for the third quarter on the whole on account of a higher base. And investments in the eyewear business will curtail their margins from 17% to 15% odd. But that's about just the next couple of quarters. Going forward, the way the company is looking at increasing its market share, etc., the street may perhaps like it. But the big question for Titan, however, is at near record high and at 63 times FY24 earnings. How much of this solid gold is actually in the price, and how does the street take these numbers?
All right, we're going to wait by and see how the street takes the numbers. Mangalam, thanks a lot for that. In fact, remember, we will be discussing the second quarter earnings outlook as well as, what the company is making of their own performance with Titan CFO Ashok Sonthalia at 9:45 a.m. on Bazaar Corporate Radar. So you don't want to miss that conversation, and stay tuned for that. But speaking of solid numbers, State Bank of India also reported a stellar set of earnings. So Abhishek is here with the roundup of what the details look like and also what brokerages are saying about the numbers. Abhishek.
Well, Pavitra, as you mentioned, it's quite a stellar set of numbers that is coming in from SBI. The ROA or return on asset has crossed the 1% level, perhaps for the first time in the history that I have been tracking this bank. So bank reports the highest ever quarterly profit, led by the fact that, loan growth has been pretty robust. A 19-quarter high in terms of loan growth, nearly about 20% YOY and about 6.6% sequentially. So foreign business growth has been pretty robust at about 31.5% YOY and about 9.1% quarter-on-quarter. By business, I mean both the deposits and advances taken together. So the net interest margin is one of the best that you are seeing in last 7 years, coming in at 3.32%, with domestic net interest margin at about 3.55%. So the operating profit is really very strong at about 16.8% YOY and 65.5% sequentially. Sequentially, we also have the treasury portfolio, which is actually impacting the operating profit, but no taking away from the fact that, stress in the balance sheet is one of the lowest that you are seeing in many years, given the fact that gross NPA ratio is one of the lowest in last 7 years, coming in at 3.5%. This compares to CLSA estimate of around 3.7%. So the net NPA ratio is below the 1% mark perhaps for the first time in last 7-8 years, and credit cost is one of the lowest that you are seeing, given the fact that it's at a mere 27 basis point. So ROE remains strong both in terms of NI and PAT. It's a huge beat on our poll. Brokerages have upgraded the earnings estimate anywhere between 10% to 15% for FY23. Back to you.
All right, Abhishek, thanks a lot for taking us through all of the highlights from SBI's performance. With that, it's time for another short break on the show. But when we come back, we're going to talk all about the world of commodities. There's a big rally in crude oil prices, so we'll bring you the details. Welcome back. You're still tuned into Power Breakfast, and as promised, let's discuss the commodity space now. Manisha Gupta joins us with an update. Manisha, good morning. There's been a sharp rally in the crude prices.
Well, it has been some bit of a profit-taking as well coming in the morning right now, and that is after China reiterates to strict COVID containment approach going forward as well. Also, you are looking at China COVID cases climbing, so that means the stop-start economy that we've seen China to be might just about continue. And then the strength in US dollar also is weighing onto the prices. So even as we did see crude oil prices gain between 3 to 4% in the previous week, we have seen prices come off those 9-week highs right now. The crude demand in Europe and US, while at pre-pandemic level, is still on the weaker side, is what the markets believe, and that's also weighing on from the highs right now. Same is the cue for the metal prices, where we did see very strong gains on Friday, anywhere between 2 to 5% of a jump up across precious metals and base metals is what we saw on Friday. But today, because of the strength in US dollar, here as well, you are looking at some profit taking. So copper is off its 2-month highs, silver prices off 4-week highs, gold prices off 3-week highs. That's exactly how you're looking at the rest of the metals as a pack as well.
All right, Manisha, thanks a lot for bringing us a quick roundup and check on the commodity space. But with that, we're going to wind down on this edition of Power Breakfast. The Asian markets are all higher, so it's looking good across the board there. And the SGX Nifty is indicating a good gap up start for our own markets, over 80 points in the green on the SGX Nifty.